The market has remained relatively flat as investors are waiting to see if a coronavirus stimulus bill is going to be passed or not, as Speaker Pelosi has put a 48-hour deadline as to when Republicans can come to an agreement to get a bill passed before the election. In this week's video, we're going to cover the news and returns from last week, as well as cover a key economic advisor saying that the Fed needs to have an additional $3.5 trillion worth of quantitative easing support for the economy. And we'll also talk about mass amounts of mail-in votes being disqualified here in the state of Pennsylvania only 2 weeks before the election.
As Matt just mentioned, the U.S. markets are relatively flat here on Monday morning, and the same was true last week. The S&P 500 was up about 0.2%, while the Dow Jones was just positive. The Dow Jones still holding steady and positive for the year. The S&P 500 up almost 8% and getting close to being up double digits year to date. The NASDAQ had a pretty strong week, up about 0.75%, now up over 30% again for the year. Or the Russell 2000 was down about 0.25%, and the only U.S. index that we're tracking here that was negative last week, still down about 2% for the year. There were two major news stories on the U.S. economic front last week. One was good and one wasn't as good. First off, there was an unexpected jump in September with retail sales. Retail sales numbers for September were up 1.9% versus the economic estimate of about 0.7%. So this is just showing that people are starting to spend a little bit quicker than anticipated. Now, the negative news stories comes out of the jobless numbers, as new jobless claims rose last week to the highest level that we've seen since August, as there were 898,000 new jobless claims versus 830,000 that was the estimate. But on a positive note, continuous jobless claims continue to drop. So the discrepancy here between these two numbers shows that there's still a lot of work to do and a lot of uncertainty in the job market. Now, foreign and emerging markets were both negative last week as well, with foreign markets down about 1.5%, while emerging markets were down 0.6%. And emerging markets up 1.5% year to date, while the foreign markets are down about 7%. Now, while we're talking about the international markets, China's GDP numbers came out last week as well. There was a 4.9% increase last quarter versus an estimate of 5.2%. And what that means is China's GDP grew about 5% in the third quarter of this year versus the third quarter of 2019. Although China missed their 5.2% estimate, it looks as though they're on the verge of a full V-shaped recovery, just like the United States is.
Last week, Michael Kiley, who is a senior economist for the Federal Reserve, released his plan as to how the Fed is going to be able to keep interest rates around zero for the next couple years, which the Fed has stated multiple times that is their plan. Michael said that the Fed's going to have to put out about 30% of the overall U.S. economic output to get the economy stimulated. Now, this would be around $6.5 trillion. And the Fed has already put about $3 trillion into their bond buyback program. So that would be an additional $3.5 trillion being put into the bond program to help stimulate the economy. Now, you may be wondering why this matters. Well, we've said multiple times that the Fed balance sheet has been directly correlated with the stock market for years now. So if history continues to repeat itself and the Fed dumps another $3.5 trillion onto their balance sheet, we could see the stock market follow. So now moving on to the topic of the election. Here in Pennsylvania, mail-in voting is certainly a problem, as 370,000 mail-in ballots have already been rejected. Now, to put that into perspective, Pennsylvania shipped out about 2.8 million ballots, and they've received about 700,000 back. And already 370,000 have been rejected. That's a little over half so far. It's now very clear that the state of Pennsylvania was not ready for mail-in voting. And unfortunately, I think we're going to see that around the country as states are now participating with mail-in voting for the first time. So this really means two things in our eyes. One, the chances of a contested election dramatically increased. And look at Pennsylvania for an example. President Trump won the state last election by 44,000 votes. if we've already thrown out around 300,000 votes, the loser of this state is almost guaranteed to challenge the results, which would prolong us knowing who the President of the United States is for possibly months. Second, mail-in voting was supposed to help the Democrat Party as more people will get out to vote. And a Gallup poll showed that about 90% of Democrat voters were looking to vote by mail, as compared to about 15% of Republican voters. So if that's the case, and some of the elections that we saw with mail-in voting in the state of New York and New Jersey had a rejection rate of around 20% of ballots, if that's the case, then a lot of the advantages that the Democrat Party could have had with mail-in voting may have been thrown out the window, and this actually could be an advantage for Donald Trump.
The biggest thing that we're paying attention to this week is to see if the government can agree upon a second stimulus deal before the Tuesday deadline. We'll also continue to monitor the third quarter earnings season to see if the companies that are reporting this week can follow suit from what the financial sector did last week, as most of those companies beat their earnings and their expectations. Thanks for watching, and if you enjoyed this content, subscribe to our YouTube channel and follow us on Facebook.